Bhat of Dalton Capital has joined in to talk about all of that. Mr. Bhat, morning. It's been a week, 4 or 5 days for the Indian market. Do you expect more downside over the next few weeks?
Well, I think it depends on what comes out of today's credit policy statement, plus also events internationally, and whether any fillip is given by the government. But at current valuations, there is not a great deal of comfort given the growth outlook. And of course, you have always this issue about FII outflows, whether it is in the debt market or on the equity market. So I think we should watch this space closely. We are at a very interestingly poised at very nearly the 200-day moving average, and so therefore, a fall could be quite steep from here if things don't turn out the way all of us want it to be.
Mr. Bhat, good morning. How bad do you think the fall could be for the markets? Because in the past we've managed to retain our trading range at any rate.
Well, I think the trading range would still be there because the February-March lows of about 5,600 I think is very difficult to breach. But given the fact that we've had a fall for the last almost 1 week now, and with the big event of the credit policy today, there could be a bounce from here. It is not as if the market has to go only one way. But I think the trading range has sort of expanded from say 5,600 to 6,000. So that's a very wide range. But I think it will be very volatile within this range given the news flow of the day.
Even if there's no rate action, but the commentary is hawkish in the sense that it suggests this kind of tight environment needing to continue for longer. Do you think it would be reason to sell down the banks further?
Well, I think the reason to sell down the banks further would be, on their fast accretion of non-performing assets, if not anything else. But I think this could be an added stone. But the point is that there is a lot of this already that is in the price, in the sense that the steep tightening that we saw over the last few weeks is probably going to stay for some time, at least for a few months. So for that is probably in the price. It is just that it should not be any further hawkish. Or if there is a window of opportunity given, saying that with this sort of relative stability that we have seen in the forex market, if this continues for a few more weeks, we might actually consider in terms of withdrawing the harsh measures that we implemented. That could be a huge flip to the market. But I mean, that is not probably, it is not going to be very sort of less hawkish than this. But the point is that the commentary is extremely important, and if this is not expected to continue for a longer time, if there is any indication that it's only a few weeks and thereafter things will be fine, I think that would be a very big fillip to the market.
How durable a fillip, Mr. Bhat? Because with that assurance might come the gates opening up on the rupee to depreciate again, and with the rupee back at 61, if that happens, do you think the market's cheer would be short-lived?
That is, of course, possible. I mean, that depends on the assessment of the RBI on how stable the rupee could be around the 60 levels. But there is always an element of surprise that the RBI can come up with, even if they say so. And if rupee starts depreciating, I think they can come back quite hard on this. So therefore, I think given that they have taken the sort of measures they have over the last few weeks, I think the forex market at least, is not going to be in a great hurry to take bullish positions on the dollar in a great hurry. So therefore, I think there will be some semblance of stability at this level. They might not really indicate a timeline, but the commentary would suggest that we can probably take a call on how long this could last.
What's going on with FI interest, Mr. Bhat? Because equity markets are seeing no inflows, even debt markets have not seen much over the last 10 days, and that remains a problem in the absence of pretty much any other buying in any of our markets.
I think that is the way it is likely to be, given the state of the global economy, with the US taper probably sometime in the next couple of months. Plus you have situation in Europe continuing to be quite bad. China is having a slowdown. Japan is not really offering great hope. So I think all over the world we have huge problems with the economy. So therefore, there is a risk of trade is likely to continue for some more time. And I think we should be happy if there are no great outflows from India. I think the outlook for great inflows is simply non-existent. So I think the only thing that could be on the margin that could help the market is some decisive action by the government in terms of reforms, in terms of doing something about the slowdown in new projects. I think if these things come about, I think there could be some sort of a semblance of stability around these levels.
Would you expect the money to come in and support this fall we've seen in the FMCG space, Mr. Bhat, or is it different this time round? Are people getting cautious on where these stocks are trading at and whether they should be bought anymore?
I think there's certainly going to be some sector rotation out of FMCG given the levels that they have reached in terms of valuation. I think there would be a sector rotation to, say, for example, IT is something that is the latest favorite. IT, pharma, private sector banks will probably continue to hold the roost for some more time. But FMCG is clearly gone past its sort of valuation peak, I think. So therefore, FMCG is not something that one should be very bullish on at these levels.
What kind of second half are we set up for the markets in that case, Mr. Bhat? I mean, we remain resigned to this range, or do you think the second half could actually show up sharper cuts for the market?
Well, two good things that could come about in the second half is one is about the after effects of a good monsoon that could show in terms of better rural spending. Plus, in addition to the run-up to the election, I think governments generally spend a lot more. So that these are two things that can probably revive consumer sentiment, at least in the rural sector, in the second half. So these are the two pluses. But the negatives are always going to be the global economy and the potential for FII outflows and the consequent instability in the market. I think it's a balance between these two sort of aspects, and we need to watch that space very closely.
Are you buying any banks now, Mr. Bhat, public or private?
Private sector banks have really given a very good account of themselves in managing the slowdown in the economy over the last several months. Public sector banks have had huge problems on NPA accretion and the ability to manage NPAs. But probably we are not very far away from the absolute bottom as far as public sector banks are concerned. I think RBI would probably sort of tweak the rules a bit to ensure that no further great addition would happen to the NPA stable as far as public sector banks is concerned. And so therefore I think we are probably a couple of quarters away at best as far as the bottom of the public sector space is concerned, public sector banking space is concerned. Since we can't call the market call the market bottom very well, so I think it is time to nibble, because these June quarter results have been terrible as far as public sector banks are concerned. So they are available at at distressed valuations virtually. So therefore, I think one should start nibbling away in these stocks and hope that a turnaround is not more than a couple of quarters away.
Mr. Bhat, what do you do with a space like technology now? I mean, yesterday Wipro got a 7% reaction for itself. Is IT still a good place to hide?
Well, I think on balance, this is probably one of the places where one could hide, certainly, because at least the second tier IT companies have given a very good account of themselves in the June quarter. Even the top rated IT companies have done probably substantially better than initial expectations. So I think this is a sector, and given that there is some sort of revival in the economy in the US, these are the sort of companies which can probably help us protect values in India. So I think IT is a space one should be at least some marginally overweight.
Thanks, Mr. Bhat, for your thoughts and for joining in today.